Here is a number that should terrify you. 800,000. That is roughly how many Canadian seniors are working part-time right now. They are driving school buses. They are covering pharmacy shifts. They are answering phones at dental offices. They are doing everything right. They are staying active. They are supplementing their pensions. They are showing up. And every single year, most of them are leaving thousands of dollars on the table. Not hundreds, thousands. Money that belongs to them. Money the government expects them to claim. Money that could pay for groceries, prescriptions, a furnace repair, or a single week off work without panic. But they do not claim it, because nobody told them it exists. Today we are going to fix that. We are going to walk through the 3 most overlooked CRA benefits for working seniors in Canada. These are not complicated. They are not lottery tickets. They are straightforward credits and deductions that the government built specifically for people over 60 who are still working. And by the end of this video, you will know exactly how to claim every single one. Let us start with the big one, the Canada Caregiver Credit. If you are over 60 and working part-time, there is a decent chance you are also helping someone. A spouse with arthritis, an aging parent living in your basement, an adult child with a disability. And here is what the CRA does not advertise. You can claim up to $8,000 in tax relief for that care, even if the person you are caring for does not live with you. $8,000. That is not a small credit. That is money that directly reduces your tax bill. But here is the catch. Most working seniors do not claim it because they do not think they qualify. They think caregiving means full-time nursing. It does not. The CRA defines an eligible dependent as a spouse, common law partner, parent, grandparent, sibling, aunt, uncle, niece, or nephew who relies on you for regular care. Regular is not a scary word. Regular could mean driving them to appointments twice a week. Regular could mean managing their medications. Regular could mean calling them every day to make sure they have eaten. If you are over 60, working part-time, and providing that kind of support, you need to file Schedule 5 with your tax return. That is it. One extra form. And the credit ranges from roughly $2,500 up to $8,000, depending on the relationship and whether the dependent lives with you. That is real money. That is a new set of tires. That is 3 months of hydro bills. That is yours. Let me tell you about someone. Her name is not important, but you know her. She is 63 years old. She works 20 hours a week at a bookstore. She makes $32,000 a year. Her husband has early-stage Parkinson's. She helps him dress. She drives him to physio. She manages his appointments. She never thought of herself as a caregiver. She thought a caregiver was a nurse. Then someone told her about the Canada Caregiver Credit. She filed the form. She received a refund of over $3,000. $3,000 for doing what she was already doing. That is not a loophole. That is the system working exactly as designed. Now, here is the second benefit, and this one is even more overlooked. The pension income amount. If you are over 65, you already know about this. You can claim up to $2,000 of eligible pension income as a deduction. But here is what most people do not know. If you are between 60 and 64, you can still claim this credit on certain types of income. Specifically, annuity payments from a superannuation or pension plan, including payments from a registered pension plan, a registered retirement income fund, or a registered annuity. But there is another piece. If you receive a lump sum payment from a pension plan that includes amounts that would have been eligible if paid regularly, that lump sum also qualifies. The average working senior leaves roughly $400 on the table every single year by not claiming this correctly. $400, that is a week of groceries. That is 2 months of internet. That is a small luxury you have earned. And here is the third benefit. The one that almost nobody talks about, the working income tax benefit. Actually, it has a new name now. It is called the Canada Workers Benefit. And here is the part that matters for you. The Canada Workers Benefit has a special supplement for people with disabilities, but it also has a generous phase-out range for low and modest income workers. For 2025, the maximum basic amount for a single person without children is roughly $1,400. For a family, roughly $2,500. But here is the critical detail for working seniors. The Canada Workers Benefit is available to Canadians who are over 60 and under 71, as long as they have working income and meet the basic residency requirements. Most seniors assume this benefit is only for young people starting their careers. That is false. If you are 62, working part-time at a hardware store, earning $20,000 a year, you can claim this benefit. If you are 68, retired from your career but working 15 hours a week at a gift shop, you can claim this benefit. The government wants you to keep working. They built this credit to encourage exactly what you are already doing. Let me walk you through the math. A single senior earning $18,000 a year from part-time work could receive roughly $1,400 from the Canada Workers Benefit. Combine that with the Canada caregiver credit if they are helping a spouse, and the pension income amount if they are drawing any eligible income, and that same senior could be looking at over $5,000 in combined tax relief and refunds. $5,000. That is not pocket change. That is a new boiler. That is a trip to see the grandkids. That is breathing room. So why do most working seniors miss these benefits? I spent time studying the data, and 3 patterns emerge over and over again. Pattern number 1, they do not file a tax return at all. Statistics Canada estimates that roughly 12% of low-income seniors do not file a return every year. Some think their income is too low. Some think they do not owe anything. Some have always had a spouse handle the paperwork. But here is the brutal truth. If you do not file, you cannot claim. The CRA does not automatically send you the caregiver credit. They do not proactively apply the worker's benefit. You have to file. Even if you owe nothing. Even if you expect no refund. You file because the act of filing is the only way to unlock the benefits you have already earned. Pattern number 2, they use paper returns or basic software that misses these credits. TurboTax and SimpleTax are fine for straightforward returns. But the caregiver credit requires answering specific questions about dependents. The Canada Workers Benefit requires checking a box that says you are working. And many seniors simply do not see those prompts because they are buried in menus. The liquid wealth seniors, the ones who actually capture these benefits, they either use a tax professional or they deliberately walk through every single line of the return. They do not assume the software knows best. They check, they verify, they claim. Pattern number 3, they assume these benefits are for someone else. This is the most painful pattern. The 63-year-old woman helping her husband with Parkinson's thinks the caregiver credit is for full-time nurses. The 67-year-old male zonto stocking shelves at a grocery store thinks the Canada Workers Benefit is for students. The 61-year-old collecting a small pension thinks the pension income amount does not apply until 65. These are all wrong. And every single one of those assumptions costs real money. Let me show you the difference between assumption and action. A senior who assumes nothing applies to them files a basic return, gets no refund, and moves on with their life. A senior who knows better files the same return but adds Schedule 5 for the caregiver credit. They add the Canada Workers Benefit Schedule. They ensure their pension income is correctly reported. That senior receives a refund of $5,000. Same job, same life, same caregiving responsibilities. The only difference is knowledge. And now you have that knowledge. Now, let me answer a question you might be asking. Is this worth the effort? I am over 60. I work 15 hours a week. My tax situation is simple. Do I really need to spend an afternoon digging through CRA schedules for maybe $1,000? Yes, you need to. Not because $1,000 is life-changing, although for many people it is. You need to because the habit of leaving money on the table is expensive. If you ignore the caregiver credit this year, you might ignore it next year and the year after that. Over 5 years, that is $15,000. Over 10 years, $30,000. That is not a mistake. That is a choice. The seniors who actually build financial security in their 60s and 70s are not the ones who worked the longest. They are the ones who claimed what was theirs. They are the ones who treated their tax return like a treasure map. They read the lines. They checked the boxes. They asked the questions. And they walked away with thousands of dollars that the government was legally obligated to give them. So here is your assignment, and I mean this. Do not just nod along and close this video. Open your tax return from last year. If you filed, look for Schedule 5. Look for the Canada Workers Benefit Schedule. If they are not there, you left money behind. You can still amend your return. The CRA allows you to adjust returns for up to 10 years. 10 years. That means if you missed the caregiver credit in 2018, you can claim it today. If you missed the Canada Workers Benefit in 2020, you can claim it right now. If you did not file at all last year, file this week. Not next month, not when you have time. This week, a simple tax clinic can do it for free. A volunteer can help you. A family member can sit with you. File. Because the $18 trillion of Canadian household wealth we talked about in previous videos, most of it is locked in houses. It is trapped in drywall and property taxes. But these benefits, these credits, these belong to you. They are cash. They are liquid. They are the money you can actually spend on groceries, on prescriptions, on fixing the furnace without a panic attack. The difference between the working senior who struggles and the working senior who breathes easy is not intelligence. It is not luck. It is not a secret inheritance. It is one afternoon with a tax return and the knowledge of what to claim. That is it. If you learned something from this video, hit that subscribe button. And if you know a senior who is working part-time, send them this video. You might just be the person who hands them $5,000 they did not know they had.